All right, you guys, another video tonight on the 21st, Wednesday. It's just probably easier to do a video tonight with the number of charts that we have that we want to look at. Let's start off with a chart of the S&P. We're going to go to gold because I said we would finish up with GLD last night, and I did not. 1243, still down below the downward sloping trend line in the 200-day moving average. But other than that, for the bulls, good chart because we're above the 50-day. We're above 1228 and we are above the 30-day moving average. So if we can get above 1250 on a close, 125 on the SPY, we will get long and call the trend long in the broad market. All right, let's take a look at gold, GLD. And what we mentioned last week is that when this low was put in, I'm sure individuals got long, and that low that was put in was on 1 week ago, today on the 14th. The next day, intraday, the low was taken out, probably about 10 or 12 ticks, taking out some stops, hard stops, and then we moved up here. Again, if you were to get long here, I would have my stop under the low that was put in last week, which was last Thursday on the 15th. But other than that, I would have assumed that this would have made a bigger move yesterday with the risk on with equities, but it did not. Quite possibly we'll get above 164, fill up this gap here. We are at the lower end of a weekly and monthly channel, so it's possible that this could be a good buying opportunity. But for me, again, this chart still looks tired, and I would prefer to get into individual positions that look a little more highly probable at this time. All right, one of those is the XLU. We talked about this on a still chart last week. We talked about it on the video. We are above the downward sloping trend line on a daily chart. We did have an increase in volume today, and we did get above these highs in here. Again, very similar chart to what we like. The inverted head and shoulders, left shoulder, right shoulder, head, neckline, probably around this 3520 level, or you can call it a cup and handle. Handle here, cup, breakout. All right. So this was up today even when the Dow was down 70 plus points. So we do have a position in this in the managed accounts. We'd probably be watching 34.30. We'd want to see it hold 34.30 on a close. One of the other positions we put on today before the market closed was consumer staples, XLP. Another nice looking chart where we're kind of building this base over here on a daily chart to the right. And then we broke out above that base on higher volume today. We got above that 32 level. Again, we would want to see this hold the 50-day in roughly around 31.10 on a close. All right, so that's XLU, XLP. And then another position we put on today. Again, we like these charts better than the S&P chart. So we're being very selective in terms of what we're buying as opposed to just going all in long. Reason for that, again, is the weakness in the NASDAQ composite, and the S&P still trading below the 200-day moving average. Very similar chart here, as you can see. We're trying to look for more low beta ETFs and or individual stocks. Cup and handle, inverted head and shoulders, breaking above the neckline, getting above previous highs on decent volume, not too far stretched within our risk parameters in terms of a stop in the 50-day moving average and or the low that was put in on 12/19, and that low was 51.69. All right, that's within our risk parameters of anywhere from 5 to 7%. Some of the bigger accounts today, we took a position in Apple. Not a big position, but nevertheless a position. Kind of seeing maybe a mini little cup and handle here. I think if we get some momentum through 400, possibly we get above 408 and fill this gap. Our stop would be roughly in this area, which percentage-wise on 396, basically 20 bucks back, is not a big percentage in terms of our risk tolerance. Let's take a look at something we shorted today. NASDAQ 100 above the 50-day moving average. We'll flip over to the Qs here in a minute. We did not buy this at the highs of the day. We bought this really towards the close. probably maybe 15-20 minutes into the close. I like it above 32.20. We may cut it loose if it breaks 30.80 and or the Qs get above, meaning they look more bullish, they get above this downward sloping trend line, and let's say right around that 57 level. We're probably going to hold off on the 59 level. We'll go 57, we get above 57, we'll let the PSQ go, and then we'll have our stop either below this candle or below today's candle. Nice tight stop on that. What else? Nike. Here's a good example of why you can sell a stock for whatever reason, hopefully technically, and buy it back at a higher price if it looks highly probable without having a problem with your ego. We exited this stock. We liked it last week. We exited it into option expiration and also into earnings. Earnings, the stock can go one of three ways, either kind of flat, way down, or way up. This did very well today. We want to see a close on Nike above 97.79, above the high that was put in on 12/13. If it gets above 97.80, we're probably going to add to this, or I should say re-enter this into our accounts with a stop under just below probably 93, maybe 93.10 in that area. Good volume today, so hopefully we'll see a breakout on this, and we'd like to see the S&P go with it. Let's take a look at Oracle. This is one of the reasons seldom do we hold a high beta stock into earnings, or any individual stock for that matter. Here's Oracle today. Not that this would have been a buy anyway, because it's below the 50-day moving average. I mean, it could have easily popped up above 32. Very similar to what Coke did today. This was a nice move in Coke. But the example there in Oracle was simply to show you what can happen to the downside during earnings. All right, so let's see. Covered GLD, Apple, XLP, XLU, DVY. Covered the S&P 500. Still watching the NASDAQ Composite, more specifically the Qs. Again, they could rally tomorrow with everything else, and then we would have to look at exiting our short NASDAQ 100 position, the PSQ. But again, above 2,600 is good. Really above 2,650 is better. Above this downward sloping trend line would be ideal. This is why this is, I don't know, this is kind of our little hedge here due to the weakness in the NASDAQ. I'm watching the futures now at about 5:35 Pacific time. Everything is pretty much flat. McDonald's looks decent, but again, we don't want to chase anything beyond its base. All right, too much beyond its base. This has kind of created another base here, but we want to look for more of a longer base, but nevertheless, good looking stock. Let's finish out with SMH. Again, this is an example here of the semis that at this time, at least as of the close today, are not working. Let's take a look at Pfizer. Nice looking chart. Again, for our purposes, it's trending. It could go much higher, but we don't want to add to it here. We want to look for stocks that are coming out of basis. Let's take a look at IBM. This looks very good. Looked very good last week, but a false breakout, as you can see. Another potential false breakout was the IEF. We looked at this yesterday. We exited last week here. It's still good. It's still holding up, but you definitely would want to see it hold the 103.80, which is support in the 50-day moving average. One of the bond ETFs we are looking at is the JNK. Good volume today, good price action. Let's flip over to corporates, LQD. Still a decent looking chart. Again, we'd want to see it hold 112. I like the JNK chart better. Let's flip over to longer end, TLT. Somewhat of a false breakout here, but nonetheless still holding up. I'm sure it's still holding up on a weekly chart. But for what we're looking at right now, we want to stick with kind of the steady as she goes until we get above 1250 on the S&P. And that is the consumer staples, the utilities, and the DVY. And we'll pick some individual select stocks, possibly getting back into Nike, and we'll see how Apple plays out. All right, you guys, that's at Doug McKay, antiwallstreetguy.com. The 21st, another video tonight. If we don't have a video tomorrow, we'll have a still chart or two, and then we'll see you Friday with video as well. Thanks.